Your first mover advantages. Tesla, the driving force behind the electric vehicle revolution, has taken the automotive world by storm. The company has experienced 3 years of profits in a row, but now a storm may be coming. In this video, we'll examine the urgent question of whether Tesla can continue to dominate in electric vehicles, even if its operating margin experiences volatility. We'll investigate how Tesla's aggressive price strategy has affected things and discover the more general worries that the business and its investors are facing come along with us as we analyze the prospects and problems facing Tesla, the leader of the electric future. But before we go any further, don't forget to hit that like button and the subscribe button. Greetings and welcome to Tesla Stock News. Let's get this video going. Imagine that everyone is discussing about the newest technology and fashions at a party, and the electric vehicle, or EV, is at the center of it all. Buzz is as popular as a dance move that everyone wants to master, and Tesla is now setting the standard on the dance floor. Now let's discuss numbers. As per new analysis by Fortune Business Insights, the electric vehicle EV industry expected to reach a staggering valuation of $1.58 trillion annually by 2030. That's equivalent to having an endless supply of money that starts in 2022 and grows at a rapid pace of nearly 18 annually. What's the big deal with Tesla? Well, imagine that this party is a race and Tesla was the first to arrive. Yeah. They set up the music, put up the decorations, and started dancing before anyone else had a chance to put on their dancing shoes. It's mind-boggling to think about your allowance increasing by 18 every week. You know, having the advantage of being the first person to bring pizza to a pizza party makes people notice and remember you for it. Now let's talk about the big entrance Tesla made. With a market cap of an astounding $778 billion, they're worth more than all those traditional car companies combined. It's like having the best dance moves on the dance floor while everyone else is still figuring out. Tesla made an incredible entrance. Investors are supporting Tesla because they think the company's early moves in the EV world will help them build a massive wall of protection in the auto industry, similar to building a fortress around their dance floor to keep others out. Tesla has taken its early bird advantages and turned them into some seriously big wins, no doubt about it. The E-trend isn't just a one-hit wonder, rather, it's more like a never-ending remix that's set to play for decades. And the fact that Tesla is the only automaker with a focus on electric vehicles and a record of profitability is one of its greatest advantages. Yes, you read that correctly. Others may occasionally turn a profit, but their EV sections are more like money-eating monsters using all those fancy accounting proceed. Here's Tesla. On the other hand, it is expected to turn a profit for the 4th consecutive year by 2023. At the end of June, Tesla had an astounding $23.8 billion in cash on hand. While most other automakers may have some cash on hand, they are also deeply in debt. Not Tesla, even if they make a ton of money from their normal car manufacturing operations, but that's not all people. Tesla has the production capacity to outpace its competitors thanks to its cutting-edge factories in Texas and Germany. Tesla is preparing for a historic change in the automotive industry. By 2024, the business hopes to produce over 2 million electric vehicles yearly. This is an incredible aim. By the state-of-the-art gigafactories mark the next phase of Tesla's ambitious German journey. The Austin Gigafactory in Texas is poised to completely transform the way electric vehicles are made in the United States. Together, these two enormous manufacturing facilities represent the beating heart of a sustainable automotive revolution. While the Berlin Gigafactory is a symbol of innovation and efficiency, is also poised to become a hub of excellence for electric vehicle manufacturing in Europe. Tesla wants to change the industry and establish new standards for the manufacture of electric vehicles. This bold initiative demonstrates Tesla's steadfast dedication to increasing production and expanding global accessibility for electric vehicles as the automotive industry develops. In addition to being an audacious ambition, Tesla's objective of producing over 2 million electric vehicles annually by 2024 is a clear indication of the company's resolve to lead the way in the shift to sustainable transportation, one thrilling car at a time. It's like breaking a new lap record in the race to build cars. When it comes to producing this many battery-powered vehicles, no one else even comes close. And let's not forget about the hidden weapon Musk Elon with his close supervision. He resembles the automotive industry's superhero from a small startup Tesla has grown into a massive automobile manufacturer. Since going public in 2010, the company's stock price has increased by an astounding 15,000%. With so many zeros, Tesla isn't just riding the wave of prosperity. They're making it appear effortless with their financial prowess and Elon Musk's magic touch, but things aren't going as planned. When it comes to its operating margin, Tesla is experiencing a bit of a roller coaster ride. Although the company's stock price is shooting through the roof, its operating margin is plummeting. This has been the case since September 2022. Tesla's operating margin dropped sharply over the last 3 quarters, ending on June 30th, 2023, from a high-flying 17.2% to a fairly unstable 9.6%. This has many questioning if Tesla's operating margin will ever reach 0%. Although we cannot predict with certainty when Tesla will reach 0, there's still a possibility because several storm clouds are forming in the distance. All of Tesla's models, from the Model 3 to the Model X, have seen price reductions of all kinds. It's like a clearance sale before a major storm, and Elon Musk himself stated that the reason for the price reductions is that they may be trying to get rid of excess inventory. Recently, the price of the expensive Model S and Model X was drastically reduced, going from extremely expensive to just fairly expensive. But the kicker is that those two models only account for 4 Tesla's total sales. Meanwhile, the prices of the Model 3 and Model I were also slashed, though not as much. These reductions, combined with the price drops, suggest that Tesla may be trying to get rid of excess inventory. The price of Tesla's fancy self-driving technology was lowered. This is similar to lowering the cost of a burger's special sauce. It might taste good, but it will hurt profit margins. Until Tesla shares the details in early 24, we won't know how all these price cuts will affect the company's bottom line. But with all of these drastic price reductions, one thing is certain: Tesla's operating margin is about to take a rough trip downward. Beyond its declining operating margin, Tesla's problems paint a complicated picture of obstacles facing the electric car industry. One significant obstacle for Tesla in its path is that, in contrast to the traditional automakers, which have developed their legacies via years of iconic automobiles, long-standing reputations, and deeply ingrained customer trust, it lacks history and brand power. In contrast, their logos are more than just symbols. They are representations of dependability, security, and history. Tesla continues to make waves in the annals of automotive history, even as it ushers in a new era of electric mobility. Nevertheless, Tesla has achieved significant progress thanks to its disruptive strategy and quick innovation, demonstrating that the new kid on the block can really change the automotive market. Tesla also made a big impression with its environmentally friendly image. There is a trail of angry clients in the used automobile market as a result of the recent drastic price modifications. It is not the ideal approach to foster brand loyalty or trust among its current owners to implement this pricing roller coaster. Traditional automakers have a lot of trust. It's like the glue that holds a brand together. Dreams of Tesla being more than just an automaker are likewise encountering roadblocks. Their energy generating and storage sector suffered a decline. And even while their supercharger network is popular, it's not a high margin moneymaker. The company's ancillary operations aren't doing much to help those decreasing margins because revenue in the second quarter in solar installation have been a financial drain since the SolarCity acquisition. Then there's the Elon Musk factor. The mysterious boss of the company, Factor Musk, is frequently juggling several side projects, from X, the rebranded social media platform, to other ventures. This split focus may prove to be detrimental, particularly if it leads to encounters with securities regulators. Additionally, Musk's tendency to overpromise while falling short of innovations has left customers and investors perplexed. Adding to the mix, economic indicators are indicating that a U.S. recession may occur soon. Since the auto industry is strongly correlated with economic cycles, a downturn might be problematic for sales of new vehicles, including EVs. When you combine all of these challenges, you have a business that is trading at an extremely high price to earnings ratio of 71 times Wall Street's projected 2023 earnings. This is significantly higher than the high single-digit ratios typical for auto stocks. Therefore, even though Tesla's operating margin may not drop to 0%, a significant decline that puts it in the low single digits seems increasingly likely. As we begin this compelling examination of Tesla's victories and tribulations, the company faces a number of obstacles on its path forward, including price volatility, brand building diversification, leadership distractions, and economic uncertainty. How the company overcomes these challenges will be a defining chapter in its exciting story. It's clear that there are a lot of exciting developments on the horizon. Tesla, the electric vehicle pioneer, finds itself at a crossroads between innovation and obstacles. One of Tesla's biggest challenges is that, in contrast to established car giants, it is relatively new to the automotive industry and lacks the credibility that comes with a lengthy history of supporting environmental causes. Trust is the cornerstone of a brand, something legacy automakers have cultivated over decades.